everybody. This is Patrick MontesDeOca with the weekend report published in Seeking Alpha and the Associated Press for June 13, 2021. Summary. The 10-year note appears to be indicating that this period of inflation is going to be transitory. The government, by supplying so much money, has created its own worst enemy. People getting all this stimulus are making more money staying at home. So it has contributed to the latest shortage. However, some service companies are replacing people with robots and computers. Looking for a portfolio of ideas like this one, members of Mean Reversion Trading get exclusive access to our model portfolio here at Seeking Alpha. Fundamentals. The 10-year note is down to 145, and it has taken the edge of the inflationary fears, at least in terms of the market. The market appears to be overwhelmed by reports on inflation, and that inflation is going to run away. Short term, we appear to be in various supply problems, as well as a shortage of labor. The government, by supplying so much money, has created its own worst enemy. People getting all of this stimulus are making more money staying at home, so it has contributed to the labor shortage. There is an increasing pressure to raise wages as a consequence. However, some service companies are replacing people with robots and computers. Self-checkout machines are becoming far more common at grocery stores, fast food outlets, and other service-based companies. That change may be accelerated by the labor shortage. The goal should be to motivate people to return to work as we return to a more normal economy. Normal is. We are starting to see some spikes in infections in Australia, Britain, and elsewhere overseas. The risk of infections is still far from over if you look at the world. Such risks are also affecting the eagerness of people to return to work. Government stimulus does not appear to be jump-starting the economy as the government hoped. We appear to be still facing severe damage from the pandemic in the economy. We don't think that inflation will be a long-term problem. 10-year note appears to be indicating that this period of inflation is going to be transitory. It appears to be the result of too much money coming into the economy, chasing goods that are in short supply. The economy should adjust and recalibrate, and inflation should, given time, ease. The key question is how long it will take the economy to adjust to the new demand. Virtual currencies appear to be in their early stages. We do not think that the virtual currency market is going to go away. We appear to be the beginning to create a virtual economy, which may be based on virtual currencies. The more attention given to virtual currencies, the more people are going to see that some people have become extremely wealthy trading such assets. The application of technical analysis can be effectively applied to such markets. These markets are very, very technically oriented, so they are very well suited to technical analysis, such as with the variable changing price momentum indicator. Silver is up 34 cents, stronger than gold at 26.28. The high so far has been 28.44. Gold is down 11 at 18.08 as we write the report. We are reverting a little bit. The variable changing price momentum indicator, the VCPMI daily gold average is 1892. The buy one level is 1881. The buy two is at 1861. Sell 1 level is 1912 and the sell 2 level is 1923. Overnight gold traded above the daily average of 1892. That put the daily and weekly markets in an uptrend. The weekly target was activated at 1924 and the daily target was 1912. The daily sell 2 level of 1923, which matches the weekly sell 1 target of 1924. Therefore, the area is a strong level to sell a long position or to go short. That level marks an area where there is a high probability that the market will revert back to the mean. The buy 1 and 2 levels around the 1860, 1861 are also harmonically aligned. So if the market reaches that area, it is a strong buy signal to go long. We are trading around the average price, which is not a good place to enter the market. There is a 50-50 chance of the market going up or down. Relying on the VCPMI, we wait for the market to reach an extreme above or below the market to enter the trades. For gold, if we come down to that 1881, 1883, expect the market to revert from there. Silver has completed the sell 1 target by reaching 2844, which it did a few times. A close above 2838 will activate the 2863 to 2871 targets. There is a bit of a mixed signal since the daily has triggered some short signals, while the weekly is still in the up mode with a target of 2872. If you are short, use 2838 as a stop. For gold and silver, as we move into the distribution of supply areas, they appear to be counter trends to the major uptrends that are developing. We recommend continuing to hold your long position and add to your core long position on these pullbacks. We expect the uptrend to continue as we near the end of this month.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our Variable Changing Price Momentum Indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VCPMI algorithm. The VCPMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VCPMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VCPMI? The VCPMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VCPMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VCPMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit EMA2trade.com for more details.